I get a lot of questions on fractals and can you use them on all different types of time frames? Well, actually you can. I do post strategies that look at a certain time frame, but what I'm going to do here, I'm going to show you how we can use fractals on 5-minute time frames, 1 minute, all the way up to 4 hours. And stay to the end. I will show you some hints and tips on how to be successful with your fractals. So let's have a little look. What I'm going to do first of all is show you around my setup, and then we can then get into it. So without further ado, let's get stuck in and let's share the screen. We don't want to see me in the corner. There we go. Right, so here is my setup that I use for the foreign exchange markets, and I'll run to the indice setup as well. So very, very quickly, we've got the Heikin candles set up here. We have a stotch set at 833, quite a fast stotch, because the FX is quite fast. We've got one currency against the other, and we want to see the changes quite rapidly. Bottom left-hand corner here, we've got the ATR, average true range, set to 5 periods. And because we're day traders, we don't use 14 ATR, we use A5. And bottom left-hand corner, OBV, on balance volume 9, which is my bespoke indicator, forward-looking indicator, and lets you know on balance, are people buying or selling? So if the markets are green, they are buying, red, they are selling. That gives us a quick heads up of what we want to do. Top right-hand corner here, well, these are some of the screeners, AI screeners that I've got, that identify and let you see all the trades that might be available to you. At the moment, this is the 415 reversal. So what we're looking at here is 2 potential shorts, euro and pound, and we can flick that through to all sorts, and it immediately searches the market and lets you know what potentially is in the market to trade. So yeah, there we go. So let's put it back to what it was. Oh, that was the long. We'll put it back to short. Right, let's get going. So we have Heikin candles here, and the overlay I use on my chart, first of all, we want to put a fractal indicator in. So show the fractal indicator. As you can see, this is the fractal indicator. We can configure this, and we can make the lines a little bit bigger for the video. And there we go. You can see the green and red lines are a little bit larger. CP is closing price 1. So what that does is the fractals start calculating after the peak and start showing after the next bar count. So on here, you can see here, get this arrow, the bar count, fractal starts drawing there. And again, here. So we set that. The fractal indicators are some that I've designed as well. And if you look down in the comments below, you'll be able to see where you can get this fractal indicator. The fractal indicator is available for Pro Real Time and for Trading View. So if you use PRT or Pro Trading View, you can get them, no problem at all. The next thing I look at is my guiding principles. So my guiding principle for a day trader is a 4-hour 200 EMA. So I'll put that on, and that's my setup. The idea being, if I am trading above the 200 EMA, I'm going long, only looking for longs in the market here. And when we're under 200 EMA, only looking for shorts and using the fractals to be able to do that. I do use for entries in the smaller time frames the 9 EMA as well. The 9 EMA is definitely a friend. So overlay 9 EMA. So what we have here is a 200 EMA, a 4-hour guiding principle. They're going long or short. And the 9 EMA is very closely tracking the actual price action. So really, if I'm going long in a perfect world, I would want to be trading above the 200 EMA on the 4 hours and be trading above the 9 EMA. If we can get both of them, that is the perfect storm kind of trade. So that's my setup. Heikin-Ashi candles, fractals, 200 EMA, 9 EMA. So again, don't forget, I am putting all the tips at the end of this video to show you actually how to do this. What this video, purposes video, show you my setup for forex and gold, my setup for indices. So this is the forex setup. So let's just have a little look at this. It's what USD Japanese. So actually, we could put some of it live. I'll show you this first. So what we're looking for here, on the 4-hour time frame, people have said, will it trade 4 hours? Will it trade 1 hour? Will it trade 15? Will it trade 1? In the right hands, you can trade any time frame you require. It all depends on the asset you trade in, its size, in other words, the volume that's going to be running through it, and the fundamentals. Never forget the fundamentals. When we trade the fundamentals as well as the technicals. One thing I must illustrate, we are not technical traders on our own. That's crazy. We like to have the fundamentals on our side, and once the fundamentals are on our side, then we can use a technical setup to execute the trade. So we have both things on our side, and that's the best way to go. Right, 4 hour. Let's just have a look at this on the 4 hour. So on the 4 hour, USD Japan dropped through the 200 EMA. So that looks a great hindsight trade. We don't do any hindsight trading here, so it hasn't dropped under there. So we're waiting for the first fractal. This is on 4 hours. So I just want to go through and show you on 4 hour, on 1 hour, on 15 and 5, and show you what it looks like. So what we're looking at here, if we're going to trade this fractal, then there's a 4 hour fractal, a breaker of that fractal line there, just below it. So the way you want to get into this market is you identify the fractal line here, and then you want to add the spread below that to be able to get into the market. So let's say this line was 15 or 45, spreads around about 1. So you want to get in 15 or 44, thereabouts. Okay, so that's the break of the fractal. Your stop is above the top of the fractal here, and the way you put your stop in would be the fractal top plus the spread of that asset plus an extra pip. The reason we have a stop so tight here is because if there's a fractal reversal of the market, you're probably wrong, and the market is going to go against you. So you need to be out of the market. But what you always need to do is have a stop on everything they do. Do not have any open trades. That is crazy. Risk management is absolutely key. So your fractal break is here. The market moves along a bit, pulls back up, and it produces a higher fractal. As you can see here, we've now got a fractal that is high. Let's get this arrow correct. A fractal that is higher there. So once that bar draws in here, you are ready to trade this market short. So the way you do that is you put your order in below that fractal. Now, the interesting thing is this bar is under the 9 EMA and under the 200 EMA, so you're good to go. The issue is on a 4 hour, or well, on any time frame, is when the market draws this fractal in, it does it on the 1 count. So between here and here, it's okay on a 4 hour. You've got 4 hours to think about it. You can set this up, and that's great. And you are looking for a break of here. You're looking for at least a 1-to-1 risk reward, and you can see there's significantly more than a 1-to-1 risk reward. I'm going to come into the tips later to show you how to go for a 1-to-1 or higher risk reward. But for the moment, I'm just going to show you a one-to-one. I'll show you the hints and tips at the end of the video. So if you're really interested on making money, being consistent, wait till the end of the video and you'll be able to see. So that's an example of the market going short. Now let's take an example of the market going long. We're now 200 EMA on the 4-hour, and we are going long because we are above the 200 EMA. The fractal drew a long bar, a long entry here. We were also over the 200 EMA. So as it drew here, our one-to-one entry was here. There. And the reason the stop is here is because when that fractal formed on this CP1, closing price number 1, the fractal line was there and the baseline was here. So that is your baseline. Do not get enticed into tightening your entry on a fractal setup. Only tighten your stops when you are actually in the market. The market formed with a fractal here and a stop here. So that's where your formation is, and that's where your stop stays. So here's another fractal entry here, and that's one-to-one. We're trading, this is actually live Friday the 13th. Oh, I'm not good for some people. And this market, you'd be in the market on a 4-hour and still not made your one-to-one, but you are in the market and your stop is here. And we are just running with this trade at the moment. If you were in it, I'm not currently trading this. I just wanted to show you. I'll take that off. So that's a 4-hour entry. Just shows you how you can use fractals. Now, what we want to do is we'll look at this date here. Look at this date here, which is what? Let's do. It's 27th of November. Can you do it in 1 hour? Well, we know on the 4-hour, on the 27th, that the market was short. So let's go back to the 27th. So 27th, there the market was short. So the guiding principles, of course, on the 4-hour. Little tip before we get to the hints and tips at the end. If you can get the 4-hour and the 1 hour to say the same thing, you are screaming short or screaming long if the price is trading above the 4-hour and the 1 hour. If it's trading below the 4-hour and the 1 hour, again, screaming short. And these are very, very high probability trades. If you can get it down to the 15-minute for the market to all say the same, all long or all short, then again, it's great. So without further, let's get into this. Right. So we've got fractals going short. We have a fractal here on the 26th. That was a day early, wasn't it? It crossed between 26 and 27. So let's look at this one. There's a fractal there on the 27th. Market comes screaming down. There's another fractal there. Market come screaming down. And another fractal here. The fractal here. Now, interesting enough, the fractal formed here. So your stop is actually there. That's where it actually formed. When the market moves down and you enter here, there's a new fractal top there. So you could move your stop down here. And as you would have seen here, this market, that particular trade would not have worked. I'm not going to show you trades that always work. It's realistic. You got to be realistic in trading. No matter how good your strategy is, if you can get it working 7 out of 10, 8 out of 10, fantastic. But in all reality, all you need is a strategy to at least get to one-to-one, better than 50% of the time. Fractal trading will be, depending on what setup you actually use. Fractal trading is very, very good. On a weak setup, it might be 70% accurate. On a really good setup, you're in the high 80s of constantly ripping money out the market. And you keep trading your fractals until the market tells you you're wrong. So that's one little tip. Just keep trading until the market tells you you're wrong. Don't go on hunches. Don't go on anything other than let the market tell you where the price is going. It is always right. The market is always right. Okay, so let's get back. So we're trading short here, as you can see. Let's go back on the 4 hour. When did it go along? So when it went along 10th of December. Let's go back to the 1 hour, 10th of December, 10th of December here. Oh, and it crossed above the 1 hour, 200 EMA. So we've got screaming longs again here. So here we go, 9th, 10th, 10th. Let's get the right times as well. You've got to make sure that it's not good picking trades while you're all in bed. You've got to take trades when you're out of bed. So I start generally at 5:30 in the morning, UK time. So let's see, around about 5:30. So would that have been a trade for me? 7 o'clock, absolutely yes. And I would have gone long. And the trade is this fractal market's pulled down. You've got a fractal here. The fractal was formed 1 hour before we placed the trade, and the stop would be here because it's under that depth of fractal. So we'll put that in. People in the comments will say, oh, you could have done better than 1-to-1. Yes, I'm just illustrating how to get in. We've got lots of other videos, and I'll do some videos on how to extend your profit way beyond 1-to-1. So we've got an entry here and a stop here, and boom, that obviously worked. If you were going to continue trading this, would you actually trade it again here? Well, the stock is oversold. So one thing you got to watch out for, we'll come to this at the end of the video, your best entries are when your stock and your fractal technicals all match up. So a trade long here would be fantastic. A trade long, oops, where have I gone? Where we've lost this here, I've gone mad with my pointer. Let's just get rid of that. 1. The next trade would be looking for the market to pull back and the fractal, looking at from roughly these levels, somewhere around here. So next fractal, nothing. Market set up. There is a trade. Your stop is under here, and boom, look at that. That is obviously a market announcement. We've got markets running to the bottom and to the top, short and long. There's just no chance of you ever getting a fractal and being. You could have been lucky. You could have had, as they all say, if you're feeling lucky, punk. We could have got in there and traded it up if it went up first and made the money, or it could have come down and stopped us out first, having gone in. The market opened here and closed here, but then went high and low. Now, one thing I will say is one thing you never do when we're doing fractal trading is trade on the open of the market. So 8 o'clock on the UK and the DAX, GMT, and on the open using GMT numbers, 2:30 in the afternoons. You do not trade volatility or economic announcements. That is suicidal or just tantamount to gambling. Do not trade the open at 8 o'clock looking for a fractal break, or the 2:30 in the afternoon in Northern American. We just don't do that. We have systems for trading the open, trading the gap, but do not trade an economic announcement or a market open. It takes away your edge completely. So remember that. Right. Next trade. We've got a fractal breakup here, which looks quite nice. But you can see the stock is high. So would you take that? Well, we'll talk about that at the end of the video. Would we take that or not? We can see quite clearly it wouldn't have been stopped out, and we'd be in profit by now. That's not the point. So we're looking at all these areas here, and you can see we have another pullback. The pullback here. So do we take that fractal? Well, if we do take that fractal, our stops under here, quite clearly you'd have seen that one would have stopped out. We'll tell you at the end of the video why you should not have took that trade. And then you can see longs along here. Okay, let's get down into the detail into 15 minutes. So again, we know from the 10th, everything was hunky-dory for going long, and the fractals start tightening up and getting smaller. So does the changes in the stock keep pulling back. But you can quite clearly see here a break of the fractal going long, and make sure it's in your trading hours while you're at work. It's no good picking on things, for examples, that are outside of trading hours. So here we are. There's a fractal here, 4 o'clock, a bit early, after 5:30. So there's one there. That would have been a trade that I would have took if I was sat trading, and as luck would have it, that would have worked. Would I keep trading more? Well, if you earn 1% a day, you are absolutely smashing it. So it depends on what you want to get out of trading. I think two good trades a day, if you can earn 1% a day, or even I train my traders to try and make 2% a week, 161% return a year. You'll find lots of people claiming all sorts of things. Just put me on again. You'll see lots of people claiming massive amounts of money. Well, probably gamblers. Some people do make lots of money very, very quickly. Most people do not. And really what we're looking for, if you can make 160% a year, you'll be in the top 1% of traders. You really will. People try and claim all sorts of things. There's all sorts of people on YouTube at the moment thinking that 13-40% a year is really, really good as a trader. And actually it is, because most people lose money. So with the fractals, 30-40% a year should be very easily achievable using fractal strategies. You just need to learn how to use them. We do that in our room all the time in my private trading community. If you are interested, click the link below, and I'll take you around the room and show you fractals and what we do. And doing 30-40% a year is not beyond the witting man. As I say, we try and get people in the position where when they trade on their own, they are earning around about 2% per week, 160% a year compounded. It sounds far-fetched, probably, but come in the room and I'll show you. It's just what we do day in, day out. Okay, right. 15-minute fractals, as you can see, work quite well. I'll just keep on this as an example. 5-minute frackers, back down to the same illustration point. So we want to back to the 10th, don't we, roughly, for going long. Let's just keep it there. 11th, a bit more data, pull a bit more data on. Okay. So we'll go back to the 10th. What was on the 10th? 10th. That's 11th. Keep going back a bit more. All right. Okay. So we're on the 10th now, and we're early doors in the morning. Let's zoom in. Early doors in the morning. So I start at 5:30, as you know. So what we're looking at from about 5:30 is the opportunity to trade. Market came up, nothing there. Market pulled back. Let's just keep an eye out where that 200 EMA is as well. As I said, if you can, where is it? Whoa, all the way down there. If you can get everything on your side, complete duck alignment with the 200 EMA from 4 hours all the way down to 5 minutes, doesn't really get any better than that. This is screaming long. So markets pull back on the stotch. We're after 5:30. And the market has then produced a fractal here. And well, I'll just draw it in so you can see. We're looking for a 1% return. There we go. There's the return. So the market, you would have been into the market round about 6 o'clock-ish, and you've been out of the market roughly at 7:25. Job done, 1% in the back. As you know, a lot more money there to be had And so I'll show you that at the end of the video, how to get a lot more money out of the market. So that is the setup for FX and gold. One of the things you do need to keep an eye out on, and I do like the OBV9 again, that indicator. I wrote that bespoke indicator. You can get that for TradingView, and you can get it for Pro Real Time in the link below. Great indicator. It just keeps your money in your pocket. Again, ATR, you can see ATR going down, average true range is going down, volume going down. Volume's probably going down because less participants are going into the market, and you can see with the unbalanced volume, it's absolutely just going diddly squat, going absolutely flat. So people are walking away from the market. And do you want to go along again? Well, you could do. It's right on even keel. If we just push it all the way back to here, show you in real time what that looks like. Where are we going? So let's get this running back. So here we are, real time today, 10:30, Friday the 13th. So market's going good. A little pull back here, a little pull back here. You can see participants are walking away. Is this a fractal to trade, which is good? Absolutely, yes. There's a great fractal breakout to trade here. Okay. Volumes on the way down. The perfect storm, of course, is to wait for the market to pull back. You stotch under the 25th percentile, ideally under the 20th, and take your first break after that, and then you're away. However, as you can see here, the stotch can stay overbought for a long time and oversold for a long time. When the market is up here, keep an eye on your on-bonds volume. If the volume is still growing, you can still go. If you're trading above the 9 EMA, you can still go and just keep going. If you are not stacking trades and adding trades, then the perfect storm is wait for the market to pull back. Wait for your stops to pull back. If it's 5 minutes you're trading on, and then trade it. Now, some of you like 1 minute, so let's get into 1 minute. And again, make sure it's in the time frames that you are up and around. So let's have a look here. One thing I will say when trading the 1 minute time frame on fractals, even though the 4 hour is the presiding overall momentum for the market, so market long, if you are into the 1 minute time frame, do not trade against the 200 EMA trend. It is suicidal. It will take money out of your pocket. The market is volatile. Right, let's get back to, I'll show you the FTSE, the indices setups now. So let's just quickly use, for instance, we'll put you on to UK. So I'll just turn these off. These are, I'll talk about these in a minute. So again, 200 EMA. These are my setups here that we use every day in my trading room. These are the targets for the day on Friday the 13th, 8375. We use a stotch 1555. Always keep a track of the 200 EMA. Is the market developing long or short? Well, actually, it was developing quite nicely and had a bit of a flat spot here. And from a technical point of view, this market is screaming long. We're trading above the 4 hour 200 EMA. These are the fractals. This is a 9 EMA. And again, the stotch, like it is. All the way you entry is exactly the same as I explained before. Generally, we like to trade from 1 minute to 15-minute frackers. You can trade larger ones, larger time periods, but very, very effective using 1, 5, and 15-minute frackers. So, some of the rules. One of the rules to keep money in your pocket is you only trade with the trend. Rule 1, only trade with the trend. Rule 2, if you are trading forex, only take your first entry after the market is punched under the 25th percentile or the 20th percentile, even better, but the 25th is fine. So on this example, you're trading with the trend, you've got the pullback, there's your fracker, boom, of course that really worked. The third thing to keep you safe, if there is such a thing as being safe in trading, risk managed would be a better word, is always look to your left and try and find the highest swing low in time period you're trading, so 15 minutes. So let's just draw this in. There's some hesitation here, so you might want to draw a little bit of that in, but there's the real key swing low, the market pulling back. So when you've got this pullback, what you want to see is that on this breakout, using a stop round about here, of course, can you get a one-to-one into this area or into this area? In other words, the previous swing highs. Where is my risk? So you can quickly use a little tool like this, or you can use a ruler and quickly put your trade in. There's my risk stop. There's my reward. Can I fit this in? Just my watch out is this previous hesitation here. So that's your previous hesitation. So you got your rule 1 on with the trend, rule 2, pull back, rule 3, can I fit this in? Well, just, but there's your hesitation. So one of the aspects that you will look at as a trader is you've got some risk here at 0.75% return. So the thing that you use as your conscience to trade all the time is you want to be able to see that the market is continually trading above the 9 EMA. Okay. So what you would do, what I would personally do on here is as the market comes up to this level, I would be looking to take half off if the market drops under the 9 EMA, and it did. So you'd come out a little bit here, and then I would move my stop to entry for the rest of my money. And if we get stopped out, then you're getting stopped out for 3/4. You're getting stopped out for half of 0.75%. So you're getting stopped out for 0.3, 0.4%. Okay, and then you're holding that level, and you've now got a stop to entry. We'll work this through. Okay, so you've now got a stop to entry. So your stop is now here. As you stop, the market has not gone to full target. You've banked some money. Your stop is in here. So at the moment, you are completely risk-free trade. So that gives you the ability now, completely free, is to put another 1% risk on the market. So you are now looking to extend this. Now, you've already set off here. Now, this rule only applies if you're already in the market, having first chosen the dip. What we're looking at here is try and extend and compound a trade. So the next trade, if you were not in, would be down here. So what I'm showing you here on the hints and tips is how to extend a potential entry and profit from that. So you've took money out here. The next trade you would add, because it's risk-free and you are running a trade, is this fractal here with a stop. Let's get this correct. A stop here. There you go. So don't forget, you've still got 0.5% running here. So now you're in with 1% risk and 1.5% leverage. The market comes straight up, boom, and you're out. Again, the second one, boom, here, it broke the 9 EMA. So that already hit target, so you're out. This one is running roundabout at the full target here, the full target from the previous trade. At that point, you could take the first one out if you wanted to. However, you are still risk-free because you've made 1% here and you're still carrying 0.5% here. So you could now move that stop to your next stop of the prior trade that closed out. And now you're looking for your next trade. Your next trade is this fractal here. And your stop, let's get this correct. And your stop is here above that fractal with your swing low there. That's your next trade. The market's gone up. There is no, you're in midair. There is no reference at all on this time frame for you to understand what's happening there. So at that point, do you trade this again? Well, you can. You can just keep trading until the market tells you you are wrong. Now, personally, I would have probably run this knowing that we're overextended at this level. Probably would have come out with my profit of getting towards 2%. However, let's just run this one through. So you're in the market now. That's obviously I've got my little. That's obviously your 1%er there. You've took a little bit of money here. Now you're waiting for this market to push up. Now we're in no man's land here. So what you would do is you have a stop. You've got no reference of a risk. The risk is the market just completely reverse and come down. So your 1% risk stays at your 1% risk. However, this first one, you can now move all your risk profile up to here. And you can continue trading that until you either get stopped out here, which will take this one to 0.3 again. So you made like 0.35. So you made 0.7 there, plus 1%, 1.7. And this one, if this stops, this is in your scenario of your trading. So you got 1.7. This market here, if it stops, knocks you out, or -1 here, but you've already made 1.7. So you've already made 0.7. So in this scenario or sequence, you can't lose. And the market comes down, and this is your no man's land trade. You know you've got money in your pocket, and you are just extending this trade. It doesn't look good here. The opportunity here would be on this bar here to say, I'm out. And you would be out for a 1 pip profit or something like that. But also, you'd be also extending your profit from this first trade up to here. So on that sequence, you'd have got out with quite a bit of money in your pocket. But as you can see, a few minutes later, the market hit this full target as well. Not a few minutes, these are 15-minute bars. The market would have hit full target here as well. So very nice indeed. That is how you would manage your risk. I'm going to get off, and I hope that was useful. A little bit long. I've chopped a few bits, tried to make it a little bit shorter. I'm just passionate about trading, so unfortunately my videos are a little bit longer than they should be, but I just want to make you successful, and I just would like a little bit of feedback on people using the fractals. So if they're not successful for you, I want to try and make them successful for you. If they are successful, please tell me, because the only reason we're doing the YouTube channel is to help people trade better, and if they do trade well, to trade better and constantly learn. So hopefully that was useful, and speak to you again soon. Cheers guys, bye-bye.